Hello, it is Jane Slacksmith here, and a quick little update. Now, for all our Investors Choice Mortgages clients, we have just gone through all the lender updates and some of the things you need to know, and the market analysis on what's happening in the property market. There are green shoots ahead, but there are some stormy waters as well that we need to be aware of. So I'm glad that we've covered that, but there's one thing that I really want to point out, and I think this is really important, and that is at the moment, we have been telling our clients, during COVID-19, it's an opportunity for them to go back to their lender and ask them what is the best rate that they can get at the moment. Now, in update number 1, we went through some of the lenders that you may have and the lenders that you can compare against when you're actually saying, but this lender has a cheaper rate. But what we're seeing at the moment is that when you do call these lines and you say, hey, I would like to have a cheaper rate, what is being offered is even a cheaper rate, which is often a fixed rate. Now, this fixed rate, there are some real concerns that you need to know about, especially because the person on the other end of the phone is not going through some of the information about what the pros and cons are. So what I really encourage you to do is actually understand what the effect of a fixed rate can be on you. Now, we spoke to a client just this week who 18 months ago, they got a fixed rate of 3.59%, which just seemed amazing. It was a great rate, it was a 2-year rate, and they locked that in. Now, the equivalent 2-year rate at the moment is around 2.5%. So it's a 1% difference. And she's just called up to say, hey, look, I really, can I break this loan? It's only 6 months to go and get the cheaper rate. Now, it's going to cost her thousands of dollars to break the loan because the people who are securing the loan are no longer going to get 3.5%, they're going to get 2.5%. So they're going to charge a break fee for that. And that was something that was not anticipated. So when you actually fix a loan, there's some things that you need to think about. That is, what is the future purpose of the property? If you're going to sell within 3 years and you take a 5-year fixed loan, then you could have an economic break cost that you're not aware of. If you have plans in the next 18 months to potentially take the advantage of the market and get back into the market, you might need to refinance the current property. If you refinance the property, you have to refinance with the lender that you're with if you have a fixed rate loan. Now, what that means is that you may actually already be at the servicing ceiling with that lender, so you can't get the money out without breaking the fixed rate and moving to another lender that is going to assess you differently and give you more money. So just understanding what you want to do in the period of time that you want to fix the loan is important. So that's one thing. But the other thing is also, what opportunity you have to save money as well, because the fixed rates do not come with an offset account. Now, there is one lender that does that, and that's Adelaide Bank. But for every other lender, you can't pay more than, depends on the lender, $10,000 off a year or put $30,000 in redraw. So it's important to understand the different lenders have different requirements there that allow you to put money into the loan or pay some off. But the offset account is really it's an absolute gift to us. And you imagine, we have a $300,000 loan and you have $50,000 in the offset. With an interest-only loan, you're only paying interest on the $250,000. Now, if you have a $300,000 loan and you have it fixed and you then have $50,000 in the offset, you're not getting the benefit of the offset. So what that might mean is, let's just say you have a $300,000 loan. You have $10,000 in savings at the moment. You know that you can actually save $10,000 a year for the next 3 years. Then maybe you're going to split the loan and you'll have a $300,000 loan split into $250,000, which is fixed, get the low interest rates and sleep at night factor because you know exactly what your repayment's going to be. But you're going to have $50,000 that's not fixed. And that's when the offset account can actually give benefit to you. So there's so many different things to consider. If you'd like to have that conversation with us, please do. Book a time, just go to investorschoice.com.au/book a call, and you can book a time directly with us to have a chat. And if you would like to download our fixed rate ebook, then go to investorschoice.com.au should I fix, because that is, I guess, the question that's in everyone's mind. There are some very, very good rates out there. If you ring up the bank, I'm sure that they will be happy to have you locked in with them for 3 to 5 years. But the reality is that it may not actually suit your future plans. So we just want to give you the information now so that you can plan ahead. If you go to that ebook link, then you will also have a little bit of an assessment checklist to see if it's really going to suit you. Anyhow, I hope that helps you. Just a quick little update on fixed rates. There are some great rates out there, great opportunity, but just understand that they can also have consequences. All the best for now. And as always, here's to your property success.